Welcome back. You're watching Buy Now Sell Now from 18 Now SBI Live Studio, and let's shift focus and let's talk about pharma sector, and let's deep dive and understand the kind of opportunity for Indian pharma that persists in the current environment. And we are joined by Amey, Chalke, Pharma Research Analyst, GM Financial Institutional Securities. Amey, hi, good morning and welcome to the show. So let's begin with the impact of tariffs. You know, how has that impact from the tariff announcement by the Trump administration on branded and specialty pharmaceuticals been? How are you pricing these uncertainties into your valuations right now?
So on the branded side, there are very limited number of companies which are exposed to US market, and at present the valuations of some of those companies have already corrected. However, in our view, some of these companies do have manufacturing presence in the US as well. So although these risks are there in the price, I don't think so in terms of earnings it's likely to getting played out in the future, even if the tariffs gets announced on these branded and specialty products. So we are still positive on these companies which are supplying branded products from India to US market.
That's as far as branded and specialty products is concerned, but also wanted your thoughts on how the second quarter earnings season panned out, and what will your pecking order be within the entire hospitality space? Will you prefer hospitals over CDMOs? Will that be the case? And will this sector be over diagnostics and pharma? Will this view maintain?
Yes, that view remains the same. If you have looked at the 2Q numbers in pharma healthcare space, hospital continue to lead in terms of the growth. They have reported at an average of like 16-17% top line growth with a EBITDA growth of around 17-18%, versus the pharma peers have reported around 11-12% growth and similar EBITDA growth for these companies. So our preference remains the same: the hospitals, CDMO players, and then pharma generics. Especially in hospitals and CDMO, both these sectors, subsectors, you would get to see at least 20% EBITDA CAGR for next 2 to 3 years, versus the pharma generic space, the EBITDA earning CAGR would be flattish for next 2 years.
Sure. Amey, let's also take a macro view out here. You know, how sustainable does the China Plus One momentum looks, and are innovators making long-standing supplier exits from China, or is this more of a temporary tactical shift that you are analyzing?
I think this is a structural play, which the structural tailwind which is playing out, and Indian companies will continue to see momentum on the commercial project side, and I think we will see something like a 15 to 20% kind of a revenue CAGR for these CDMO companies, led by the commercial products or projects which will ramp up over next 2 to 3 years.
Okay, and which companies do you think will stand out going forward? Any sub-sector specific ideas that you can share from your sector? I understand you can't talk stock specific, but where do your preferences lie?
So if we talk about CDMOs, the themes which should play out over next 2 to 3 years, if you follow the Chinese market, the larger companies become much larger in this growth phase. So similarly, the investors can rely on the larger CDMO players from India because they are likely to benefit over next 2 to 3 years. Similarly, in the hospital space, investors should invest in those hospitals where there is a improvement in the EBITDA per bed ratio over next 2 to 3 years, where also the city mix is changing for these hospitals. These hospitals typically investors should invest in, where the valuation should also be at a discount to some of the leaders.
Let's also talk about Q2 results over here, Amey, and you know, what kind of a pecking order out here do you reaffirm after looking at the Q2 results, and you think, or you the actual numbers prompted any change in relative conviction out here?
So Q2 is typically stronger for hospitals and pharma companies. It's typically weaker for CDMO companies. In hospital space, it has played out in line with our expectation. So we have not changed our pecking order in terms of the names which we like in the hospital side. Similarly, in the pharma space, some of the names which we are positive on, they continue to report a good set of numbers in Q2. However, there are some other companies where we are negative on. The near-term earning momentum is likely to be strong, but we believe that FY27, especially for the large generic companies, is going to be a weak year in terms of the earning growth because of some of these bigger opportunities are going off where the generic competition is increasing. So that's the reason why we are negative. The near-term numbers are quite good for these large companies, but maybe after 2-3 quarters, you will start seeing the earning decline in some of these companies.
So that's as far as subsector category-wise performance is concerned. But Mr. Chalke, let's also talk about the broader picture and India's positioning as compared to the rest of the world. Where do you see India's positioning at this point in time, especially because of the kind of uncertainty that we are seeing on account of tariffs, on account of Biosecure Act? How will these factors play out going forward, and what kind of impact will that have on the Indian pharmaceutical sector as a whole?
Indian pharmaceutical sector as a whole has always been export oriented, and these companies continue to have those cost related benefits in terms of the manufacturing side. So that will continue to remain there. Generic companies will continue to see good amount of growth both in the US and the non-US export markets. It's just that there would be some temporary hiccups like we have seen in case of Revlimid and other products, which will impact these earnings. Otherwise, in terms of the structural tailwinds, they are still in place.
Amey, also, with persistent oversupply of generics from other Asian countries, how do you see India's reputation as the world's largest generic supplier shift to more value-driven products? And what kind of challenges you think we need to actually sort out?
So Indian companies, if you have looked at over last 10 to 12 years, have improved in terms of the quality of products they are supplying to the global player globally. So they used to make like oral tablets, oral solid products earlier. Now they have migrated themselves towards biosimilars, complex injectable products, inhalers, etc. And that value migration is already happening. And although players from other countries are emerging, at present, they will also go similar value cycle over a period. So I don't see that that will act as a threat, at least in the near term, to Indian generic company.
Okay, so that is not a threat, but basis the second quarter results, have you made any major changes to your earnings estimates for the entire sector as a whole?
No, the earning changes are in the range of like 0 to 5%. There are not significant earning cuts or earning upgrades post 2Q to anything to highlight.
Right, with that, we let you go. Thank you so much, Amey, for taking time out and talking everything about healthcare and pharma sector with us today. Thank you. And it's a wrap on Buy also in today's edition, but then you stay tuned because more market updates and stock specific news coming up after this break.